Let me ask you something. What if I told you that right now, as you're watching this video, the biggest financial shift of our generation is happening, quietly, behind the scenes? While the media is busy talking about interest rates, layoffs, and politics, the real story is unfolding deep inside the walls of Wall Street. Billions of dollars are flowing into Bitcoin again, not from retail traders chasing quick gains, but from the same institutions that once called it a scam. And the most shocking part? They don't want you to know about it. Not yet. Because when the average person finally wakes up, they'll be buying Bitcoin at 10 times the price. This is the rise of Bitcoin in 2025, and what Wall Street doesn't want you to know. Every major Bitcoin cycle starts the same way. Silence. No hype, no mainstream attention, just quiet accumulation. Back in 2018, when Bitcoin crashed from $20,000 to $3,000, media headlines called it dead. CNBC literally ran a segment titled "The End of Bitcoin." But while the public was scared, smart money started buying. And by late 2020, Bitcoin had exploded to $69,000. Now, in 2025, the pattern is repeating. Google search trends for Bitcoin are down 70% from 2021 highs. Social media mentions are at their lowest in years. Yet, behind the scenes, on-chain data shows a massive accumulation by whales and institutions. BlackRock, Fidelity, and JP Morgan, the same giants that manage trillions in assets, have been filing Bitcoin-related ETFs and quietly buying exposure. This isn't speculation anymore, it's preparation. Because every cycle begins when no one's paying attention. For over a decade, Wall Street laughed at Bitcoin. They said it was a bubble, a fad, a tool for criminals. Now, they're fighting to control it. In 2024, the SEC approved multiple Bitcoin ETFs, and within weeks, billions of dollars flowed in from institutional investors. BlackRock alone saw over $2 billion in inflows in the first month. Think about that. The same institutions that mocked Bitcoin are now buying it legally, at scale, and earning management fees from it. They've realized something the public hasn't. Bitcoin isn't just digital money, it's digital collateral. In a world drowning in debt, where the US national debt just crossed $35 trillion and inflation is eroding real value, Bitcoin is becoming the digital equivalent of gold, but more liquid, portable, and borderless. And Wall Street wants a piece of it before the next explosion. Every 4 years, Bitcoin goes through a halving. That's when the number of new Bitcoins created every 10 minutes gets cut in half. It's built into Bitcoin's code, predictable, unstoppable, deflationary. The next halving is set for April 2025. Historically, every halving has triggered a massive price run. 2012, Bitcoin, $12, $1,000, 2016 to $600 to $20,000, 2020 to $9,000 to $69,000. So what happens in 2025? This time, there's a twist. In past cycles, the demand came mostly from retail. This time, demand is institutional, and supply is shrinking faster than ever. Only about 6.25 new Bitcoins are mined every 10 minutes right now. After the halving, it'll drop to 3.125. That means even less Bitcoin available for new buyers. And remember, ETFs are already soaking up more than that every single day. We're heading toward a mathematical supply shock. Here's where things get interesting. Wall Street's strategy isn't about short-term trading. It's about long-term control. They're using what's called dollar-cost averaging, buying small, consistent amounts over time, regardless of price. This builds position quietly, without spiking the market or drawing attention. Meanwhile, retail investors, normal people, are doing the exact opposite. They buy during hype and sell during fear. That's why, statistically, 80% of retail crypto investors lose money. But the smart money, they're patient. They accumulate during boredom, and they cash out during euphoria. If you want to play the game like them, you need to understand. Bitcoin isn't a get-rich-quick scheme. It's a long-term, asymmetric bet, a chance to own a piece of digital scarcity in a world printing trillions. Let's zoom out. The entire world is changing, quietly but rapidly. In 2023, the BRICS nations, Brazil, Russia, India, China, and South Africa, announced plans to create a new global currency backed by commodities. At the same time, the US began researching a digital dollar, a CBDC, central bank. Digital currencies might sound modern, but they also mean full control. Every transaction, every dollar, traceable. That's why Bitcoin matters, because it's the opposite of control. It's open, transparent, and borderless. Countries like El Salvador already made Bitcoin legal tender. Now, nations like Argentina, Nigeria, and the Philippines are exploring it too. Slowly, governments are realizing they can't stop this technology. They can only adapt to it. Bitcoin is no longer alternative finance. It's becoming the new financial standard. So, what happens next? Analysts are predicting multiple possible scenarios. If history repeats and Bitcoin follows its past halving cycles, we could see prices between $150,000 and $250,000 by late 2026. That's not fantasy. That's math and market structure. Even major institutions like Standard Chartered Bank and ARK Invest have publicly forecast similar ranges. But the real question isn't how high can it go? It's who will own it when it does. Because every Bitcoin that institutions buy today is one less Bitcoin available for you tomorrow. Here's what most people don't realize. Wall Street doesn't fight innovation. They buy it, package it, and sell it back to the public. That's what's happening with Bitcoin ETFs. Retail investors think they're owning Bitcoin. In reality, they're owning paper Bitcoin, while institutions hold the real asset behind the scenes. This gives them control over supply, liquidity, and even market movement. It's the same playbook they used with gold. Turn an open, decentralized asset into a financial product and make billions in fees. So if you truly want to benefit from Bitcoin, don't just watch from the sidelines. Learn how to hold it yourself. Understand cold storage. Understand wallets. Be your own bank, because that's what Bitcoin was built for. Right now, Bitcoin feels boring, and that's exactly what makes this moment powerful. No hype, no noise, no FOMO. Just quiet, steady growth under the radar. It's the same feeling the few early investors had back in 2015 and 2019, right before everything changed. Because markets move in silence, and by the time everyone is talking again, the real opportunity is already gone. So here's the truth. Wall Street isn't scared of Bitcoin anymore. They're scared of you realizing what it really is. They know once enough people understand Bitcoin, they won't need banks, brokers, or middlemen. And that's why they're buying quietly, while telling you to stay away. But you're smarter than that. This is the new era of money, the digital gold rush of our time. And the next 12 months will decide who wins and who watches from the sidelines. If this opened your eyes, hit that like button, subscribe to BitBank, and share this video with someone who still thinks Bitcoin is just a fad. Because by the time they realize what's really happening, it'll already be too late.